Okay, I see some new names. So yeah, let the crowd trickle in. Hey, morning. For you, it's afternoon, right, Shri? Good afternoon, good afternoon. Anyway, good morning, good afternoon, good evening, depending on wherever you are joining from. Uh Thank you all for joining in. What we are session number 206. So been here, bull market, bear market, rain, sunshine, storm. It's a good place. You meet every weekend. Saturday. Let's talk about markets. Let's talk about investing. I enjoy doing that, and hopefully you're getting some value and coming, week after week. So I appreciate that. Keeps me motivated to come and share what I see in the markets. It's all there is no 2 days or weeks are same in the markets. Always keep me on toes, and it's an interesting place to be in. So we'll get going. I do have a bunch of things that I want to cover today, but that's not, this is for you guys to to understand, learn about investing. So if you have any questions or anything else, maybe we can do that. But otherwise, what I do want to, the couple of things that I had in my mind was finish up the earnings review. So last week we couldn't do the two of them, Uber and Pinterest. So I would want to go through the earnings um, of these two companies, and then we saw a bunch of these 13 Fs being filed last week. So would want to go through in terms of what these hedge funds are looking at. I think every time when a new 13F comes in, I do review and see, okay, who bought what, who sold what. Not that it matters a lot from my own investing decision, but it's good to see. So we'll want to go through some 13F filings, or as I have some interesting charts. And of course, we'll review what happened in the market. AI craziness that's going around. Any questions you may have, any option strategy you want to discuss, bring it up. It's like I said, this is for you guys. So don't be shy. You want to talk through your question, unmute yourself and talk it through. Otherwise, I also monitor the chat. Put it in the chat, and if I miss it, just remind me, hey, you missed my question. Okay. So what else? What you guys have been doing? The markets are what, all-time high? So I guess there's nothing to complain in the market. Let's what SPY is what? Hold on. We're looking at SPY is now 5.68% for the year. We are 2.5 months, not even 2.5, what? Sorry, 1.5 months, right? We are 6 weeks into 2024, and we are up almost 6%. What else? What more can we ask for? Right? It's great. See a comment from Sam. Comment on microcomputer buying fries. 2012 Salesforce reneged pullout on intention to rent in Mission Bay. So I think Supermicro may be buying fries just for the location, because at least from a retail perspective, I don't think there is any value left in the merchandise, or maybe there is some value in the merchandise what fry sells, but as a business, it's a sad to see the decay of fries as a retailer business. But I think they just got eaten away by Amazon, and the remaining stuff, Best Buy ate them.
Vivek, what I wanted to point out is 2012 Salesforce pulled out of by Mission Bay, and then it grew exponentially. So this might be pointing that Sun Microcomputer is interested, might have a really great next decade.
So let's look at, I do have a chart for super microcomputers. So let's get into that. I think that's how I want to start today's session. Is the scary times, right? Super microcomputer probably may have the best next decade, because, and again, I'm not a forecaster. I don't have a crystal ball. No one has it. But today, we think, the market thinks that it's gone the next week, not next week, next year and the years after that is going to be great for any company that has anything to do with AI, right? Now, super microcomputer is one such company. Of course, the big daddy is NVDA, and we have seen the craziness that NVIDIA has caused among investors, the FOMO and all that stuff. The next one which we've been seeing is super microcomputer. It's on Baillie on 880. They have a big campus. So maybe they're looking to expand and buying the retail location of, right. But this is what management is thinking. I've never seen any management which, in the frenzy of when the analyst and all the market participants and analysts are fawning over the company and saying it's going to be great. I've never seen any management comes and say, hey guys, cool down, right? We are probably expecting too much in too short period of time, right? So why not? Let's buy fries, let's expand. When your share price is what, close to $1,000, right? So now whether that will materialize or not, that's what we have to see. Even if the business materialize, right? As an investor, my main focus is whether if you buy the shares of super microcomputer, are you going to make money or not, right? And I don't know. To me, it looks like very scary. Look at the chart of super microcomputer, right? Where it was at the start of a year, it was close to $300. It's already, from 300, it's up to $900. I mean, actually, it on Friday it does more than $1,000. So we did it, right? We pushed SMCI over $1,000 before we start to give up all the gains, and eventually closed at what, $800, down almost 20%. So I'll be very, very, very careful on buying some of these stocks, and I have a few that I do want to talk about. One is super microcomputer. I don't know, it's all squeeze. To me, it looks like a squeeze driven by many retail investors who are just buying call options. And I recall seeing similar frenzy in 2021 on those meme stocks, and now we know how all that ended up, right? So it's yeah, some may want to say, hey, let's get on it, let's ride it. But I don't, I'm not one of those investors, because if you get onto the roller coaster, how do you know when to get off? Right? So be careful. A lot of frothiness in the market, especially anything that has to do with AI. You put your, add your name, add AI to your business name, and you see the market flies. Or if you have to do anything with NVIDIA, right? So other company, and this is what I hold in my portfolio, right? Nanox. And suddenly I was surprised why the Nanox is up like 80-90% after hours. What the heck happened? Because there is no news. In fact, there was a news on Nanox, not on Thursday, but before that, I don't think, I mean, we can discuss sometime later. Around, they got some FDA approval and the stock was up like 15-20%. That's fine. And I'm like, what happened to it? Why is it up like 100% after hours? From, it's almost, it hit more than $12 from $6. And the news, and we're going to look at that later on, Does anyone know the news? Well, let me ask this question. So, and this is crazy stuff. So the news was because 13F came out and NVIDIA also have some positions, sizable positions in some other companies. They also revealed their 13F. NVIDIA is not a hedge fund, but they had to reveal those holdings in 13F. And in that 13F filing, they had exactly Pershing got it. NVIDIA has a position, right? Yeah, FDA approval pushed it by 10-15%, but the fact that NVIDIA has a position in Nanox, and it's a minuscule position. NVIDIA invested $396,000, right? That's not even a salary of an engineer in NVIDIA. Right? It's just like, it's nothing. It's like not even a speck of dust for NVIDIA, which is what $1.7 trillion companies. What does $396,000 even, $396,000 even mean for NVIDIA? But it doesn't matter. NVIDIA invest in anything, the stock like was up 100%, and it added almost $300 million to the market cap of Nanox. This is what, as it's a crazy times. So I took this opportunity, trims not, I mean, I really want to hold this company forever, could go down to zero, that's fine. But when I saw this, I saw a little bit, I sold covered call on it. And come Friday, from $10, it's back again, what, $13. So yeah, so it's a crazy time out there. Just the fact that NVIDIA has invested in it, you know, uh, I think investors are thinking this is going to be the next NVIDIA. So this is scary. Another one like SoundHound. I don't have any positions in it, but again, NVIDIA have invested in SoundHound, and look what it has done to their stock from what $2.20 all the way to almost double. So that's what I meant when I say if we have anything to do with NVIDIA, maybe I should just probably the property prices on Kaifer Road, Kaifer and San Thomas would have gone high because that's where the NVIDIA's head office is located, right? It's crazy stuff out there. Sachin says sound on TSP, Nanox, BMR. Yeah, BMR. That stock was up like 1,000%. I think I tweeted it. Or was it we reviewed it last week? I can't recall. But there's something called Beamer Research or something. And all that company did was that they are presenting a joint paper in some conference in collaboration with NVIDIA. And I think that company does have basically it allows you to either render video or something related to that. It's related to video rendering. And the stock is up like 1,000%. Okay. I don't try to chase these. I don't look for these things. This is purely speculation gambling. If you're lucky, great. Congratulations if you made money in that. Not investing. I can't run my house on that. I can't plan my financial life based on when my lottery ticket will work out, right? But as I said, these are the scary times, right? Be careful out there. TSP was $80 a few years back as a new black blockbuster trucking space. Oh, Nicola, what is TSP? TSP. Two Simple Holdings Incorporation. What the heck? Okay, let's see what it does. TSP. Let's find out what TSP does. Let's TSP. TSP. I don't even see it on Finviz. Okay, so too simple. TU, too simple company. Oh, autonomous tracking. Got it. Okay, so got it. Wherever there is autonomous driving, NVIDIA would be in. Fisher says sound I sold at $4. So good for you. Because some of these stocks which we hold in portfolio and suddenly go up for no reason. I mean, the most difficult decision to make at that point of a time is when should I get off the gravy train? And it went up for no reason. I mean, the reason is, hey, Nvidia just invested in it, which is doesn't mean that it should go up like 100%. Right? So there's always the constant battle between making a sound decision and you know or battling the greed factor, saying it is, what if it becomes from $4 it goes to $6? Will I be cursing myself thinking I got out too soon? So on Nanox, I sold a couple of covered calls at 12.50. And I'm hoping that, hey, if it gets called away at 12.50, I have no problem. The stock at that point of time was trading at $10. And I think I'll get an opportunity to buy it at uh, cheaper than 12.50 later on. So anyway, so what I do is in some of these cases, I'll just go and sell a covered call, or maybe sell a portion of a holding right away, and then sell covered call maybe to ride it a little bit. But anyway, so on Nanox, I'm a long-term holder. I mean, I still have to see their execution. They are now out of a regulatory risk, but if they execute well, the company could still do well, right? So it's not I didn't buy it for speculation. I've been holding this company for now almost 3 years. So just out of a blue, it became 100%. Well, what the heck? So anyway, yeah, that's it's a crazy stuff out there. Look at Lilly, and the market is now talking about, could Lilly become the first $1 trillion pharma company? Right? There are only two things that have been working in the markets right now. Looks like one is anything to do with AI. The other thing is anything to do with the GLP-1 drugs, right? Basically weight loss drugs. And Lilly, even though they are the kind of a late in the game, but looks like they probably will be able to uh, make a lot of money through their Zepbound, and there is another drug which Lilly has, which is related to weight loss. So I was reading an interesting story about Lilly. It's I think the first company that came out with the drug was Novo Nordisk, Ozempic. Remember last year we talked about what the heck is, Ozempic. Looks like every fast food company stocks were going down because Ozempic was approved by FDA as a weight loss drug. And then Lilly came up with Zepbound, and other one is what are Mozant or something like that. But an interesting story is that Lilly, one of the scientists in the Lilly actually had asked Lilly to focus on this in 1990, almost 30 years ago. And the company didn't want to pursue weight loss drug. That scientist moved out of Lilly, created his own biotech companies, and around this, and sold it, made a few $100 million. And kind of a Lilly could have done it way earlier, but better late than never. Sam says Mark Tropper, son of tech exec Susan Wojcicki, drug OD, died. Yeah. Since I talked about drug, I just finished an audiobook, which was based on, I yesterday finished an audiobook which was based on the life of Tony Hsieh. I don't know if you remember that or not. He was a founder and CEO of a company called Zappos, and that company was basically popularized the culture that, became a phenomenon, culture of happiness, giving perks to employees that even, could put sometime Google to shame. But Tony Hsieh again got involved in drugs and died at a very young age of about 44 or 46 or something like that. It's a story of, basically I was interested to understand the story of Zappos. But yeah, bad things. Anyway, coming back to investing. So look at the Lilly stock. It's it's up 32% for just for 2024, right? And what it's I guess this is what it's October. No, not the October low. This would be 2023 ends up here. Maybe this is June or July, something from 300 now almost double. So NVDA itself, the big daddy of AI, is up. So last year it was up 200, what, 40%? The train hasn't stopped. It's already up like 50% in 6 weeks, right? We're not even 50 days into the year and it's up 50%. So this what NVIDIA is reporting on. Hold on, let me just, oh, I didn't put on my chart of who's reporting when. I think I have it below. So it's reporting this week, this coming week, NVIDIA is reporting the results. And I think this is going to be the most important company to report the results for this earnings season. It used to be Apple, right? Because Apple is the biggest market cap company, now dethroned by Microsoft. But anyway, Apple used to be the big, used to be the market mover or the most important company to report the earnings results. Now, even though NVIDIA has a lower market cap, but there's so much of a sentiment involved in the market because of NVIDIA that if the results are not better than the perfect, we could see some good volatility in NVIDIA. So much of a growth in the perfection of results is already priced in that any crack they see, we're going to get some volatility. And not just in NVIDIA, I guess we could see a sell-off across the tech companies. There's a lot of money has flowed into the market under the category of AI is going to change the world. That reminds me, did anyone watch the videos of, did anyone follow Sora? SORA. It's this is what I'm saying, SORA. So Sora is a new tool released by OpenAI this week. They released the Sora tool, which is basically a text to video generator tool. It is interesting as well as scary at the same time. The videos that you see, and maybe I'll pull off, I think Greg Eisenberg, I think I saw his videos. He's put down a summary of almost 10 videos. Hold on, let me just pull that out. Okay, there we go. So let's look at this. This all video has been, this is basically AI generated. Yeah, saw the dog. If there are dogs, there are a video of a kind of a space movie, and all these are generated by text. This one, the prompt is create a movie trailer featuring the adventures of 30-year-old spaceman wearing a red wool-knitted motorcycle helmet. Right? And it looks so real. Right now, Sora can generate videos for 60 seconds. This one, the prompt is a grandmother with neatly combed gray hair stands behind a colorful birthday cake and numerous candles at a wood dining table. An expression is one of pure joy and happiness and happy glow in her eyes. So anyone can now be a videographer. Look at this one. extreme close-up of a gray-haired man with his beard in his 60s is in deep thought, pondering the history of universe. There is no way for a common person to figure out whether these things really happen in the life or not. So what scares me is the amount of a misinformation and the damage that can be done to society. Now, even if you're watching a video, you can't just believe it, that these things actually happened. I'll skip this one. Look at this. This is like, you could actually rewrite the history. Right? Now, this is a video of California in 1930s or 40s. You can pick up any city, or you can pick up any historical event and create a video and post it. And now, because of social media, the world is your market. The distribution reach is worldwide. Create any damn thing and put it over there. Not many people will even think, that that's a fraud. Right? We are so attuned to assume that video is for real, right? At least now, many people become skeptical of what they read. Hey, because this could have been typed, and the humans maybe, you may not be truthful in what you're writing, but what you're capturing in a video means that things happened. Right? Camera says the truth. I remember it's almost 6-7 years ago. Our company had recruited a leadership trainer, and we went through leadership training. And he talked about two things. He says, when decision making or relationships, we take it. There's a lot of there are facts and there is a drama. And the differentiation between these two things is, if it has been captured by a camera, it's a fact, right? Or by instrument, it's a fact. For example, today it's 80 degrees. It's a fact. It's hot today. That's emotion. Right? It's a fact that a person was speeding, because that can be captured by a speeding camera. Right? It's an emotion, or it's a story that, hey, maybe he's stealing something. He's a thief who basically, or he jacked a car and ran away. Well, because that story is dependent on who you are as a person. If you are a firefighter, maybe you'll assume he's a volunteer firefighter running for or an emergency duty. If I'm a thief, I'll probably assume maybe he's a thief trying to escape, right? Because I see a speeding car. It all depends. All those are stories. The fact is that is driving at 80 miles per hour. So now I was thinking about them, like, dude, now anything seen on a video is no longer a fact. So that's a scary stuff. Anyway, it's gonna become an election nightmare. So yeah, if you get your hands on Sora, maybe want to try it out. I have not tried this out. I think I saw it 2 days ago. I didn't have a time to try this out. But yeah, AI, it will change the world. The world won't be the same with AI. But here's my caution. Same thing had happened with the internet, right? 1999, we were paying ridiculous amount of a price for internet-based stocks. Anything that's got a .com saw their valuation go through the roof, right? Did internet change the world? Hell yes, of course. Internet changed the world in more ways and in more quantity than we could have ever imagined in 1999. Right? But now coming from investing, so that's from my impact perspective, business perspective. Internet gave rise to a lot of businesses that investors could not even have thought of when they were investing in internet-based companies in 1999. But still, NASDAQ took 14 years to get back to its .com peak. I'm not sure whether it's a peak right now in AI frenzy, or this craziness could continue. Even if the AI could change the world, I think the entry price does matter. So I'm not going to chase the rallies right now. Even though AI will change the world, AI will increase the productivity. It's going to spring up a new ways of working, open up a new business models. right? Just that internet has done. But still, that doesn't mean that the current price is the right price to pay. So I've been cautious. Too much froth in the market. Now, depending on where are you on your lifestyle, life stage, or on capital side. If you are in capital appreciation phase and want to take some, swings on the market, more power to you. If you're in a capital preservation phase, you gotta be cautious. And just remember, sometimes return of capital is more important than return on capital. Right? In this phase, current market phase, it is important reminder. I want you to just go back and make sure, before you invest or start to chase any of these rallies based on AI, just understand what you're getting at. What pricing are you trying to pay, right? SMCI, like Sam was saying, right? They expect a good expansion in the business next year, and that's why they've taken up the fries retailers. Sure, I don't disagree. They have already upped their guidance by about 40%. And that's we saw the stock, at that doesn't mean the stock should be trading at $1,000. That's all I'm trying to say. Cisco, it took 20 years for Cisco? 20 or 24 years for Cisco to get back to its .com peak. Cisco was a great company. I mean, who would have doubted or debated the fact that we need networking gear in 1999? If you see internet exploding, you need networking. You need the storage. The EMC story. What happened to EMC? There are a lot of investment that went into broadband, right? A lot of companies in broadband, their stocks ran up like crazy, and then we had a glut of broadband, right? Again, I don't have a crystal ball, but getting a similar vibes of like we had in .com. I'm not predicting doom and gloom. I'm just saying, hey, it always pays to be a little cautious. So that's what I've been focused on, to looking at the deltas of my portfolio, and then, hey, I don't want to increase my deltas. Right now, I think I'm one of the lowest deltas I ever had. It's not that I'm short, I'm still long, but with the lowest amount of a delta that I recall in last 2-3 years. Just being cautious. I mean, over the last year and in last 15 months, I've made enough gains that I don't have to be greedy. I just want to make sure I don't lose a lot if the market corrects. If it continues to go higher, probably I'll make less than market. That's fine. Okay. All right. What else? So looking at market performance for a week, this is just a week. Some Microsoft, Apple, Google, Amazon all ended red, but Meta and Lilly, they have no idea. They don't even know what a red color looks like, right? Yeah, I mean, even with this weakness in the tech ones, especially because we had a bond yield, the bond interest rate, bond yields went up, so the tech sold off, except the ones which are in AI. So we saw, certain weakness just for a week. But looking at a year to date, still great. NVDA is up like 45-50%, Microsoft up 7%, Meta is up like 30%, Lilly 35%. So nothing to complain. Even Berkshire Hathaway, right? The value investors stock is up like 14%. This again, it hits a new all-time high. I think Berkshire is up more than $400 now. BRKB. Let's go to Berkshire Hathaway. Let's close this. Too many windows open. Sorry. Let's go back to BR. A, B, 405. So the tide is lifting all the boats. Sachin says semis, especially hardware run in cycle. Right now we are in semis up cycle. Run while it lasts. It won't be for. See, this is coming from expert. Sachin, I'm no semis expert. I've never worked in semi, but Sachin is. If you want to, know anything about semis, ask the guru. And guru says that it runs in cycles, which is true. It's a cyclical industry, and we have said time and again, when the emotions run high, everyone will build up capacity, and it takes time to build up capacity. And then there is a glut of semiconductors, and then stocks sell, sell off, and then its cycle starts again. Like what 2020, because of COVID, we had a chip shortages, and then in 2022 there was kind of a glut. We saw TSMC and ASML. They're saying, hey, there is too much. The customer is postponing the order. Even for this year, I think it's a TSMC or ASML told 2024 they're expecting like so the growth will start to come in 2025. Even then, the investors are just piling up on the stock, right? ASML is a new all-time high. I mean, I own the stock. I love the stock because of the monopoly that they have. Now the monopoly is a little bit being challenged by Canon because Canon shipped their first machine, which is competitive to their UV, but still, yeah, it's like 927. TSMC hasn't gone to its all-time high yet, but again, TSM. These are all, if I were to invest in AI frenzy, I would rather do these picks and shovels play, right? Companies that I don't know whether it's NVIDIA that's going to win, because if NVIDIA can continue to drive like 40% growth with 60% margin and all that, that will be competed away. Already we know that Microsoft, Meta, they're starting to design their own chips. And NVIDIA doesn't make chips, they just design the chips. Right? NVIDIA get the chips made by TSMC. And so is the AMD. So is Apple. So I don't care which design wins. Eventually, there are very few companies that actually can manufacture the chips. TSMC is one of the biggest one in the world. Samsung is the next one, Global Foundries. Intel has now started up a business of manufacturing chips for others. Right? So if I were to do it, maybe I'd rather do a picks and shovels play rather than trying to pick who's going to hit the gold. Maybe I'll just invest in the hardware store that is selling picks and shovels for gold mining. So ASML, LRCX, Lam Research, there are a bunch of companies that we discussed multiple times looking at the whole semiconductor value chain. But I guess, as Sachin says, when the cycle turns in the other direction, we should see all these stocks cool down. But until then, enjoy the ride. But be sure that you have your plan to get off the ride, when the party is right close to be over, which is very difficult to find out when the party will be over. Everyone thinks that let me get onto the roller coaster and I'll get down before it starts to crash, but no one is able to time it. Only people that are able to time the markets exist in YouTube or on Twitter. And those probably are the ones who are just starting off their financial or investing journey. Anyone who has got substantial amount of money managers, big investors running billions of dollars, they all say we can't time the market, right? I would rather believe them than someone on a YouTube who's always able to time the market and get in at the bottom and get out at the top. I'm very skeptics of those. Anyway, looking at a fear and greed index for this one, we're still in the greed, despite a little bit of a sell-off last week, but still a lot of froth in the market. I see Ramesh says it was true of auto industry in 80s, every 4 years. Cyclical businesses. All right, next week earnings. So what am I watching? Tuesday, Palo Alto Networks. I don't own this, but I own CrowdStrike, so really want to see. And I think Palo Alto again got an upgrade from one of our street analysts, tech analysts. So we'll see how that performs. Teladoc, this is one of a black mark in my portfolio. You know, this is where before I became a little wiser to the capital allocation aspects of the CEO, now I can, in hindsight, now I can see what a stupid decision was from Teladoc to buy, oh gosh, which company they bought and paid billions of dollars. No, the name is skipping my mind. Okay, anyway, I forgot, but they just burnt billions of dollars in buying a company. Of course, NVIDIA. Yeah, NVIDIA is not important just for NVIDIA, but even for the rest of the market. And then Thursday, I want to see what's happening to Square/Block. And my top position, Mercado Libre, and New NU, which is a new bank. It's a Brazilian-based fintech company. Has been growing like crazy. Yes, I reviewed New a while ago. Probably closer to when they came IPO, maybe just after IPO. And I think I've done a kind of a re-review it, but I never opened a position on. I don't want to add any ticket, but I do want to keep an eye on this particular company. That's all. Probably I will be focused on looking at earnings. Nikola still exists. That is great. That fraud company. I think they're in process of turnaround. So we'll see. What else you're watching? Anything else you guys watching? So I will.
Gretchen.
Sorry, which one?
Gretchen.
Gratz.
Mhm.
Sorry, I couldn't get that. Good earnings in WNT will probably be good for Target as well. You may think, right? We may think, but if I were to go by what I've seen in the social media space, that wasn't the case. Everyone assumed once Facebook reported the results, everyone thought, oh my God, ad business is back. Google did good, Meta did good, and Snap ran up saying, hey, ad business is back. Online ads are looking great. And then Pinterest, same thing. But both of those stocks got punished. So I don't know. At least on this big tech or social media ad space, it looks like the biggies basically ate the lunch of smaller social media companies. I'm not sure about the Walmart and Target, how they're gonna do it, but at least it will give the confidence around on economy, right? What's happening economy? Is consumer being pinched or not? I think from that perspective, earnings of Walmart will be important to know, because that will drive down the narrative of if consumer is still strong, inflation is not going to come down. Why should Fed cut the rates? And today, all the run up that we have seen in the market since October has been hopes of Fed probably is going to cut the rates, which now I think I don't have a Fed watch tool numbers for this week, but I heard that now, earlier we were expecting in March. Now there is a 0% expectation in March. Every Fed governor come and told, forget about it. Not doing in March. I mean, the economy is still hot. Now I don't even know whether in May we're gonna get it or not. And I think Larry Summers said this week, don't be surprised if actually Fed increase the interest rate. Can you imagine what will happen to the stock market if Fed increases the interest rates? Dude, all the what 20-30% gain that we have seen since October was driven on Fed is going to cut the rates, Fed is going to cut the rates. And if Fed pivots and say we're going to increase the rate, brace yourself. So we'll see. But I think it will be Walmart earnings will be important from the perspective narrative around is consumer, what's the state of economy, right? From that perspective, I think Walmart earnings will be important. Ramesh says, Home Depot, MRO, ADI, LNG, Walmart. Oh, so your week gonna be really, really busy then. Prashant says, I think Prashant is a new person. It's first time I'm seeing this name in here. With interest rates going higher, I feel Home Depot will go down. Yeah, I'm not even sure whether interest rates will go higher, right? If it goes higher, a lot of business will be sold off. Especially if interest rates goes higher, watch out anything related to IWM, right? Small and medium business. Those sectors are very sensitive in interest rate. Watch out utilities. Right? All those sectors will be impacted. But yeah, I mean, even the growth stocks, I mean, we should see a huge amount of volatility if interest rates goes higher. Today, with the fact that interest cuts are being postponed, markets started to have a little bit of a cough and shivers. If interest rate increase, probably it will catch pneumonia. Walmart and Costco need to fall too high. I mean, and Costco is one stock that I've not owned, and I repent not owning it. Just because, as an investor, I mean, I'm also learning is that I got the what do you call price anchoring bias. Right? I didn't buy Costco at $300. How can I buy at $500? Right? It's too expensive. So I didn't buy at $500. How can I buy it at $600? It's too expensive. Now it is like $720. So
Excuse me,
sorry,
Vivek.
yeah.
Sorry for talking about your joy of not buying Costco. Same with me.
Yeah,
When it was at $15, I thought too expensive.
exactly.
Okay, what I wanted to bring up is what I fear is because the economy is going so good, Biden's going to get a recession and then he might not get reelected. What do you think?
So, Fed says that they're apolitical, but we know that this is election year, and getting a recession in election year is probably the probability is very low. And also, your stock market wealth uh, evaporating in election year is also very bad for the incumbent, right? So Fed probably will do, or government will inject liquidity, etc., to prop up the markets. Again, these are all tinfoil hat opinions, but we have an election year, right? Which is a big factor in economy or in the markets, even though their market should be not be dependent on it, but it always is. So it's impossible to predict what will happen. If we moved from what hard recession, from a strong possibility of recession in 2023. Now we're talking about whether we'll have a soft landing or not, or maybe no landing at all. We just had what you call as a rolling recession, right? We had a recession in tech industry in 2023. We had a recession in small and medium, businesses ever since Fed started to increase the interest rates. Look at IWM. Right? IWM is still not where it used to be earlier. So it's still, let me just bring that up. Oh, come on. Let's bring up IWM.
I heard from somewhere that the IWM is the most lagging indicator and that should go up 10 to 20% now.
So if you are a fan of Tom Lee, he predicted that IWM, basically small and medium businesses, which is like IWM is, that's what it has. He's saying like it's a 50%. Because if interest rate cuts happen, That's where you see a lot of the small and medium businesses, they do well. They are very interest rate sensitive. Let's say Fed increase interest rate by 0.5%, right? Doesn't matter to Google, doesn't matter to Apple, their balance sheets are super strong. The companies that get impacted are the smaller business or smaller companies who have taken on debt, and they have to roll their debt. Now, if they have to roll their debt at a higher rates, that's gonna impact them a lot. So these are very interest rate sensitive. The moment we hear that there is a possibility or higher possibility of Fed cutting interest rates, you'll say IWM jumping up by 2%. and same is true in the other direction. So yeah, I mean, we'll have to wait and see what happens on this one. But it hasn't hit its, I think this is its 52-week high was 244. Hasn't gone back there yet.
I'm expecting this to go by April. I think once because the rotation should happen. Every time I notice that the rotation happens from Nasdaq on SPY, the rotation will go all towards the IWM.
Yeah, let's see. Yeah, hopefully you're right. But yeah, well, let's see when the rotation
Yeah.
happens. I know healthcare has already moved on. Rotation already started happening in healthcare. That has done well this year. Some of the other constituents, like financials, haven't done great. Home owners, okay, but we'll see. I'm
One
not
last
putting
question. Yeah,
any
one last
timeline
question I
there.
have is that what do you think about China market? Like my friend is the biggest one who research and he's triple down on like Baba and JD. Do you think the China market should recover?
So I think we've spoken a lot about China market. Is Baba, JD, some of these companies, if they were US listed, everyone will be on to that. They are so cheap in terms of their valuation, right? I'm gonna review 13F. We'll see some of these fund managers have gone big on China. So from a valuation perspective, the Chinese based these companies are very, very, very attractive, right? But what I can't put a dollar amount of risk, the dollar value on the risk is a CCP risk, the country risk, right? Which, it's a communist country. Government can actually take over or can put restrictions or can bring up any kind of arbitrary rules which could inhibit the growth of the company further. Like Baba, etc., trading near this IPO levels of 10 years, 12 years ago, whenever it IPO'd. I think it IPO'd around 75, $80. That's where Baba is right now. And I'm sure if you look at the revenue, that has grown 10 times. So last week we talked about Baba. It's like trading at 7 times the free cash flow. And they're gonna buy back a lot of shares, like $25 billion worth of shares. It's super, super attractive.
Yeah.
And that is why we have seen a lot of hedge funds taking huge positions of Baba. But I'm not going to double down on Baba just because I can't. The base, and again, that is like investing is very, very, very personal, right? So I already hold position in Baba. And if I come and talk about every week what I buy or sell, you've seen in like past few months, I bought Baba opportunistically. But I'm holding it because I don't want to add more because I don't know how to put a risk, how to quantify the country risk on these companies. Right? That's the only thing. Business versus valuation, these are attractive. Country risk, I have no idea how to evaluate that.
Vivek, 10 years and 10.5 years ago, Apple was saying it's buying back its stock for some billions of dollars. It was at its lowest, $360 or something like that, which is probably now about $20 or something. So
Yes,
buyback don't really do anything.
No, so Apple has been buying back their stocks over the years because Apple generates so much of a cash that they pay dividend. They don't know what to do with that cash, so better to buy back the stocks. And if they bought it at the lowest one, that's the best thing to do. But I think Apple is not timing it. They buy back every year, irrespective of where the share price is. Even if it is the highest, they'll buy back. But I like the Baba CEO, right? Right now the stock is let's pick up Baba. and you're buying back the stock when the stock is lowest, is what you should do as a company, right? And not don't buy. Majority of the CEOs end up buying back the stocks when the stock is at the highest. So now look at Baba. It is last time, close to here, which is what where's the time date? 2016, 2017, 8-9 months of gains all wiped off. This is probably when Baba went IPO, right? $73. It's same back to its IPO price. Prashant says, yeah, joined for the first time. Welcome. Rivian is big focus. I've not looked at Rivian, but if I were to look at any other EV company apart from Tesla, Rivian is on my radar. Because of Amazon got a good stake in it. They actually got a business with them. I'm not big on Lucid or Nikola and all that, or Fisker or all that, but Rivian would be the next one. But I haven't looked at Rivian recently. Michael Burry doubled on Alibaba and JD. Yeah, exactly. I'm not even Michael Burry. I saw again Howard Marks, Oakmark Capital, which generally deals in a distressed instruments or distressed company. I'm like, why is Oakmark Capital getting into Baba? Because Baba business is not distressed, but his stock is distressed. Niyanka asks, which tool are you using for this chart? This is a Think or Swim. Basically, I have an account with TD Ameritrade. Now it has become Charles Schwab, but I've been a TD Ameritrade customer for many years, ever since started my options journey. So I'm using Think or Swim platform of TD Ameritrade. AJ, me too, join for the first time. Your knowledge. I'm learning. And I learned from this meeting. So thank you for joining it.
One question I have is, I'm AJ. I'm doing this trading since 11 years. I also use the Think and Swim. Do you use RSI for monthly, or you use RSI based on weekly or daily?
So here's I am not a big technical, I don't invest hugely on technical basis, but since you asked, let me share with you what I look at, right? First of all, my investment style is I want to buy good businesses, right? Technicality is secondary. So once I identify, yeah, this is the company, I want to build position on it, then I say, if I want to open a position right now, what do I want to do? Do I want to pick up a stock, or do I want to use options to express my bullish position, right? If it is a brand new company, generally what I do is pick up some stocks so that it stays on my portfolio, and and when I see it, then I know, okay, I need to review this company. Things happened with Palantir. First time I bought the stock was around $22 in 2021 or something. I did my initial position so that it stays on my radar. And then when it was $6, I re-reviewed the company. Last year, we did the deep dive re-review in the session. I'm like, I don't think it's, deserves this valuation, right? At $6. So then I started buying more. So if I look at, okay, I want to do an option position, then I look at a combination of, where is it in terms of their CCI and RSI and Bollinger Band? And then I say, okay, is it a place where I could go long, maybe sell a put? The other thing I look at it, where is IV? So that's why it's a combination of indicator that I will look at, but that will be only when I want to initiate a position. But this is not my number one decision maker.
I see.
My number one decision maker is business of the company, and is it a good company to own for the long term?
So question is that when you think Palantir was $6, did you start doing sell puts, or did you buy naked leaps?
No, I did not buy leaps because of the interest rates are so high. The calls are expensive, and I am generally not a big
Option buyer?
big favor of buying options.
I
Right?
see.
I will do leaps only as a stock substitution, right? Which is and for a capital efficiency, but not for taking a gambling chip. So even if I were to buy a leap, I would rather go and buy a deep in the money so that don't pay anything for a fluff or for air for extrinsic value, right? Palantir is like $6, right? It's not that I'm talking about $600, wherein actually I can get a capital efficiency if I buy 80 or 90 delta call option, right? $6. How much am I gonna save in buying a $90 call, 90 delta call option? 25 cents. So that's why. Then I just bought a stock, and once I had my what I call as a coffee can portfolio, then now all I'm doing in Palantir over the last 2-3 months is selling strangles on it. So if it falls down, I'll buy more. If it goes high, I'll let a couple of them get called away and then restart the journey. So that's how I focus on.
One question I have: do you know how to calculate the DCF? What is the actual cost of the stock?
No, I don't know how to calculate DCF, but I can find some sheets. But what I do is I have a reverse DCF. So I look at, rather than me trying to figure out what's the future cash flows will be and then discount it to a present value, I'm starting to look at how much of a growth is already priced in the current stock price, right? Do a reverse DCF. So I do a reverse DCF and then say, if let's say we looked at NVDA, right? NVDA is like a 50% growth priced in for the next 10 years. I'm like, that seems to be too much, right? Yeah, maybe it'll grow 50% for the next year. Growing cash flow 50% for the next 10 years seems to be too much. But that's what is priced into NVIDIA stock price. All right, great questions. Thank you. Oh, glad you joined today.
Thank you so much.
We say selling brings you the money, buying you spend and pray that the stock will go. Exactly. I'm and you guys know, like, I hardly buy any options, right? But this week, I think that's my first option buy for the year. I actually committed a sin. Okay, now don't hate me for that. Okay, I actually bought a put spread this week because the IV was low, and I was seeing this craziness on SMCI, and I bought a put spread in SMCI, which would give me, till that expires in 2026. I'm like, by that time, AI should have gone through all its craziness, and stock should go, settle down. If not, that's fine. But on SMCI, I bought a put spread. This is my first buying option trade in this year. Because the IV was low, I wasn't getting paid enough to sell the call spread against it. Maybe I will start to sell it shorter duration call spread to reduce the cost of owning that put spread. That will probably I'll do. But yeah, that's my first option buy for this year. An unusual trade. All right, let's continue. Let's talk about, so stock buys and sells. Bought a little bit of a Tesla, right? Because I had a call spread I had a put spread in Tesla, which was in the money. So I picked up some more shares. Snap, the same story. Snap shares were called away at $12 and $14 in January. And then I sold a put again, it just to acquire at the same price, got a sign. Neo, same thing, short put at $7. Will get a sign and back to my original position in Neo. So right, only and then sold is EWJ. This is a Japanese ETF. Not that I've gone bearish on Japan, right? So last year in June, July, we reviewed why the Japanese market, could perform in the next year or so, and it did, right? It was at 62. I think it's up like 13-15%. The reason, I mean, I didn't sell off. I had a covered call and I didn't defend the covered call is either I was thinking either I should up my position to make it a, little significant part of my portfolio, or I just want to get rid of it so that I have a fewer tickers to manage, right? And I can focus it accordingly. So looking at what the other positions which I have, I thought not to defend EWJ because it was like just my initial position. I never increased my position in EWJ. So I thought, okay, let it go. I'm not gonna defend it, right? So that's why EWJ has been sold off. But it has done good, right? 15% in 6-7 months, not bad. This is a country-based ETF, right? So unless I figure out, get more attuned towards tracking Japanese market, I'm like, it's a small position. It's a distraction. So let it go. She says sold short-term put options. Maybe that will help you in SMCI. Yeah, I'll try to reduce my cost basis. Right. Ramesh sold Tesla call just to collect premium and lower the cost basis. Now I think I have enough of Tesla shares. Not enough. I mean, at least now I can start selling call spreads. You guys know I never owned Tesla. It's only I started building position in Tesla last year when it came down to my reasonable pricing of close to $210. And then since then I've been buying opportunistically at 185, 190. Buying Tesla as 250 plus was a no-no for me. So I never bought it. But now I think I got some enough that I can start selling call spreads and do iron condors and all that stuff. So I do have iron condor in Tesla. And if it falls down, probably I'll pick more. Asif, curious to know my bull thesis on Snap. So thesis on Snap is still the same, is that they are big on AR, VR, right? And number two is their Snap subscription has been doing good. Now, the worst part on the Snap is the management is you just can't believe them. So that's why I'm not adding any more, but I just kept whatever the small position that I have had in Snap, just keeping that position and reducing the cost basis, right? So I've invested a lot of time on Snap in understanding and studying this company. Some of the things that they do, I've not seen any other social media company actually doing it. So maybe it could become acquisition target. Who knows? Right?
Do you
But
think Meta will buy it?
sorry,
Do you think Meta can buy it later on again?
Meta, yeah, why not? Or Pinterest. But again,
Yeah,
I'm
means
not
like,
gonna, if I not had, sorry, go ahead.
do you think like I'm thinking Google or some of the big player will buy it just to compete with Meta?
Yeah. I mean, if I did not have a position on Snap, I probably will not gonna open a position on Snap because the management like sucks. They just enrich themselves by giving stock-based compensation. Over the past few years, it has come down, but it's still like 6-7% dilution is too much, right? But because, and again, this is what is called a sunk cost thesis, right? Sunk cost bias. Because I've already had a sunk cost in it, I've been reducing my cost basis in it, and it is a very small portion of my portfolio. It is less than 1%, right? So it's like a lottery ticket. If it works out, great. Doesn't work out, I'm not going to hurt much, right? So what special features Snap has? So Snap is, I think, I see that their use of AR, VR for the shoppers is what I like. They were I would say that the best ones in terms of using the augmented reality. I've not seen Meta, etc. doing it. But now let's say with Apple VR, Apple Vision Pro, maybe, they may want to use that. Again, so I'm not a big bull on Snap just because I had it. And I've been reducing the cost basis on this one. I'll just keep it, right? I'm not buying I'm not adding to any original positions that I had earlier. Because Here's the thing. The biggest regrets that I have in my investing life is the companies that I sold off too soon. Snap goes down to zero, won't matter for me. It won't hurt me. But if I sell it and then it becomes like big, like some of the other companies have become bigger because I sold off earlier, then it's gonna hurt. So I think the other stocks that become multi-baggers will take care of all these losses. So I'm a very lazy seller. I'm like married for life kind of a person for the stocks. So quick look at the, let me see, did I miss any other questions? No, okay. Quick look at the crypto market. We see a V-shaped recovery in all these ETFs of spot Bitcoin based ETFs. As we know, they all sold off because of outflow pressure from GBTC. Now it's net inflows coming in, and beautiful thing is all are like, you can pick, you can't go wrong with any one of these. If you're interested in Bitcoin, now there is a way to invest it without worrying about custody or opening an account in a crypto exchange and all that. You can grow to your brokerage account and pick up an ETF. Right? I'm not advocating it. This is a very volatile field. Make sure you're comfortable. Make sure it gels with your investing philosophy and with your time frame. For me, it does. So I do track it. And now since crypto has become a part of ETFs, I'll start bringing the discussions in this meeting also. Very soon, maybe some of the advisors will start adding this in the retirement portfolio. You can't escape it then. Okay. But if you have any questions, do bring it up. So these ETFs are the most successful ETFs of all times. Call what you may on Bitcoin, or say this is used by criminals and whatever. But the launch of these ETFs has put them like to be the most successful ETF launches of all times in terms of how much of an asset has already flowed under this and how much of a volume has transpired on these ETFs. And this is when Vanguard, it doesn't even allow its customer to buy it. And advisors are still learning about this space. So we are still, I would say, very early in this. All right. Let's finish up with a couple of slides that were left out from Crypto Guide of 2024. Volatility. Okay, let me just bring this up. This again comes with it's from a Coinbase institutional report. One of the case that have always been made against the, any of the crypto assets, especially the Bitcoin, is too volatile. So looking at this, the volatility of Bitcoin has been coming down. Again, I'm not going to read through everything, but just give you a quick summary. If you have any questions or want to dig deeper, just ping, and then we'll get deeper into it. Other thing chart to note is something called market value versus realized value, which actually tells us, how much of, let me put it the right way. What's the current market value, means market price of all the holdings, market value of all the holdings of Bitcoin with respect to the prices at which those were bought in, right? So if it is greater than 2, generally we have seen that call it as a market becomes a little overheated, because hey, if I own a Bitcoin, let's say $10,000, and now it is at 20 or 30, I might want to trim some of my position, right? So then we see it becomes overheated. One is when the cost basis is equal to market value, and half is when your current price market value is lower than the cost basis, and people generally don't want to take losses, so they refrain from selling. What I've seen over the years is when it becomes higher than 3, it does indicate a short-term headwind. So I do want to keep an eye on MVRV, right? So this talks about the momentum. Green means right now, if you're looking at this green, by the way, these charts are all available. You can go and find it on Glassnode as well, or CryptoQuant, or even Dune Analytics. So this green means right now we're looking at an upside momentum, which shouldn't be any surprise because of all the Bitcoin ETF, the tailwinds from the Bitcoin ETF. Looking at the Ethereum, so these 3 charts tells you how the performance of ETH has been from its cycle low. So they're looking at, Genesis means the start of Ethereum to 2018 cycle, which was one bull run. Then from 28, then it came down to bear, then 2018 to 2022, another bull run, then 2022, and this cycle is now continuing. So basically this predicts in each cycle, how long did it take and how much gain in the price performance was, right? So for example, looking at this, let's say from 2018, those crazy years, in 30 months of this cycle, the ETH had appreciated by 2000%, right? Obviously, it has started from a very low base. So you can't assume that the same is going to be the case, that in 30 months of 2022 cycle, is going to appreciate 2000%. Once your base becomes bigger, the percentage changes will become lower and lower, right? Look at the Genesis from 2018. If it was pre-mined at a fraction of a cent and it becomes $1, that's like a huge percentage amount, right? But I think the only takeaway from this is, hey, it's still early, because we've seen that the rally continues for almost 36 to 40 months, right? That's the only takeaway. Don't focus on the percentages. Again, could things be different this time? Of course. No one has a crystal ball. History doesn't repeat. It may rhyme. Or it could be more, different in the positive sense. If Ethereum ETFs are approved, a couple of issuers like Franklin filed their Ethereum ETF. I think another one also is rested at Bitwise or something. So now got a Ethereum spot Ethereum ETFs being filed after the Bitcoin ones. Same case with the volatility coming down, Ethereum realized price or basically MVRV, the same concept that we looked at, how the MVRV is doing. And momentum, again, the momentum is still green. Right now, there's a momentum in the market. Few other thing which we don't generally see in a Bitcoin, but do see in Ethereum ecosystem is a staked value. Right, so staking value is now starting to grow up again. So we're looking at what, $70 billion. I think this is still, it used to be crazy amounts during 2021 craziness, but it's continued to go up. So that means work is happening now. Total value logged in DeFi. This is where we see the degens started to, do yield farming across different platforms and all that stuff. We hit that craziness on, yield fight tokens and whatnot during 2021. Haven't gone back there yet. People learned their lessons, right? I learned my lessons, right? So, but now we see an uptick only, in this, because now the overall crypto sentiment has become better, but still a lot more to go. I guess that's it on a quick rundown on some of the crypto slides. I see one says momentum is waning. I don't know. I think right now it's not. Of course, it is nowhere closer to the euphoria of 2021. But I think with all the flush that have already happened in 2022 and 23, Terra Luna, 3AC, 3 Arrow Capitals, and the Celsius, and the BlockFi, and the FTX, and all that Genesis, all those failures, we've already been through that. Now we're starting at a clean slate. Now we got a BlackRocks and Fidelities of the world, and not the Celsius and BlockFis of the world. these companies are very well respected companies already. If you are worried about BlackRock and Fidelity, I would rather be worried about my retirement portfolio. Right? These asset managers hold trillions of dollars, and now they are getting into the crypto game, Bitcoin game. So I think the degree or the volatility will reduce, which is great. You don't want advisors, putting their clients' money in an asset which could fall down by 50%, right? So it's good to see the volatility will go down, but I think the momentum right now is in positive direction. That's my quick take. All right. Any questions on crypto? We'll be back to our traditional finance market. Other interesting things I saw, maybe I'll just say the last one thing. I don't have it here. You guys know about NFT, right? Non-fungible tokens. Last week, some I think developer, forgot the name, starts with P. Pandora Labs created a new. It's not even a new protocol because that didn't go through the proper channel, but they created a new way, or let's say a new ERC code to create a fungible NFT. I'm like, what the heck is happening? So these crazy things happen only in the crypto market, right? So if you're interested, make sure you do your due diligence. A lot of crazy stuff out there. Now this is WMT stock split, potential NVIDIA stock split. Maybe. Do you want to ride the temporary momentum in the market when the stock splits? I generally don't do that. That's not my investing philosophy. So I'm not gonna own Walmart or NVIDIA just because they're gonna do a stock split. And it's really, from a business perspective, nothing has changed. You cut my pie into 4 pieces, still the same pie, right? So it doesn't matter.
In the past, I have noticed that whenever the stock split happens, the stock crashes. Like you take example of Amazon. When its stock was 3,000, its stock went to $2,000 after the split.
Again, I think that is so. Let me put it this way: there is, forgetting about emotions and the momentum, everything else, focusing just on the business value creation. Stock split is a meaningless concept, right? It doesn't help in adding any value to the business or intrinsic value created by business, right? Now, investing is not about that, especially if you're looking at a stock price, right? And not the business value. If you're looking at a stock price, that's driven by, what the hedge fund manager, how the hedge fund manager mood is today, right? I want to sell a big chunk of shares, or how the retail investors crowd, where they do go, right? Sachin says, right? Create illusion of affordability. Right? You think, oh my God, now I can actually buy Amazon shares. It enables to attract a different type of investing crowd. Right? Now, let's say an Amazon is of $3,000. Or not every retail investor can buy it. With the caution that you can still buy it because some brokerages support fractional shares, right? So if you really want to buy Amazon, you're not waiting for it to do a stock split. You'll open an account in, let's say, Robinhood. I don't know whether Robinhood support fractional shares or not, but for example, you'll open an account with the brokerage firm which support buying fractional shares, and you still put $100 and buy Amazon, 0.00 whatever percent of Amazon, right? But there are many brokerage houses that do not support buying fractional shares yet. So if you have an account with that, you're stuck. You can't buy Amazon. Then who will buy Amazon? Those who probably have larger sums of money, who can afford to buy $3,000 shares. And those are generally, either seasoned investor with bigger portfolios, family offices, institutional investors. They don't sell the stocks if the stock goes 2% down, etc. Right? So you get a different category of investors. Like Berkshire Hathaway's, most prized investors are not you and I, who buy Berkshire Hathaway big class shares. Their most prized investors are those who buy Berkshire Class A shares, which is like probably what, $500,000 now, right? Or close to that. One share is $500,000. And those are the investors that just have kept those shares for generations, right? You get a stability, little bit stability, less volatility in your, the share price, because you don't see those people, running for the hills or, getting out of the stock at every small news. So it does attract different level of crowd, but from business perspective, it doesn't add any value. So I'm not going to buy the shares. And many times shares get a little bit of a pop when they announce a stock split, because now suddenly a lot of a crowd that was not able to afford the shares, so say, oh, I can buy now. And you see a temporary buying pressure and the stock will go up 5%, 10%, I don't know, whatever, and then it cools down, because at the end of the day, you have not created any value by splitting the stock. So doesn't deserve any increase in the price. Dave says, yeah, please talk about NVDA. A lot of lotto bets. Yeah, a lot of people buy what, zero DTE options, try to do a gamma squeeze, buying out of a money call options. Oh, by the way, the Dumb Money movie. Has anyone seen Dumb Money movie yet? It's now on Netflix. So I watched that movie and was able to, go through that same emotions that we went through in 2020, 2021 during a GameStop craziness. So if I'm not, it's a good movie to watch, Dumb Money. Dave said I'm be adding bonds in my 401k and IRA. Yeah, but with with the interest rates, last week the bonds didn't perform well because the yields of went high, so bonds sold off. But eventually, Fed will cut the rates, and that will do good for the bonds, right? So, but now when they start to cut the rates, that's $1 million question. So, any good website which shows insider buys? I mean, even Finviz has insider buys. And I don't know any other good, because I don't really track it. Let's say if you go to Finviz Costco, let's say I came here, somewhere they have an insider buy and sell, right? Insider trading. They tell you. Otherwise, I forgot. I've used once long back, because I don't focus much on this one. But if you just Google for it, there are sites available, because I've used long back to look at some insider stuff. But I don't do it on a regular basis. NVDA RSI is still around 80, not like SMC RSI, which was 90. Yeah, SMCL was, I think, the second company after GameStop that RSI was like 90 plus. My NVDA call paid out 1.95, now 650. Good for you. Congress stock purchase trackers. I think there are some Twitter accounts that track which Congress, especially Nancy Pelosi's, stocks or her trades. I don't invest on that one, so I have no idea. But I mean, there are so many things to do already. I don't want to add, tracking Congress people stocks now. All right. What else?
One question I have is, do you have faith in PayPal? Because that is the only one stock that has not rallied yet.
Yeah, so I have faith in PayPal, and did a deep dive on PayPal. I think last week we reviewed a PayPal earnings, right? Then I went through why I'm still optimistic on PayPal. But then at the end of the day, I think it's my opinion is, forget about the optimistic or pessimistic or bullish or bearish. What matters at the end of the day is their position size. Yes, I'm bullish on PayPal. Am I going to make it like 10% of my portfolio? Heck no. Because over, my investing side, I've seen why people, go bankrupt is because of position sizing, not because their thesis was wrong. but probably thesis took some time to play out and the position size were big that they just couldn't, wait until the thesis actually played out. So am I still bullish on paper? Yes. Am I gonna add more on paper? Probably it would fall down to 55. I'll pick some more. I have a short put on 55, and I think that's probably one more tranche of money I'll put in PayPal, and then no more. Right? I
Yeah,
think
it went 55 last week after the earning.
no, not so. After the earning, I had actually I had a covered call at 70. I closed that, and then I put in 55. So I put in 55 when the stock was around 60. Last week when it was 62 or something, that or 58 or something like that. It was around 60. That's time when I added a 55 short put for, I think it's for March. So if it goes down again, probably I'll pick up. But I think that would be my last tranche of investing in PayPal. I just want to make sure I position size it accordingly. She's still loading 5 million of NVDA options. Man, Uber last time looked was 25, Costco 350. Time for some pullback, please. So Uber, right? Today, let's talk about Uber earnings, right? So let me bring up Uber, and remember, I don't even remember when I last reviewed Uber here, but I went through the different businesses of Uber, and I also discussed why this is Uber could be an and this term I actually found on Twitter is could be an undeletable app, right? And this was like when Uber was mid-20s and all that. So looks like this is actually played out. So let's look at Uber, right? And after the earnings, Uber did the investor presentation. So I'll probably quickly go through that, and then you can determine, what you want to do with Uber. So let's look at Uber numbers first. So we're looking at revenue is up 15%, right? Quarter over quarter to 9.9 billion. Gross margin 39%. Operating margin. Now this is what I like. From being negative operating margin, they are now into positive operating margin. This tells us, you are now running your business cost effectively. No doubt operating income is like up 1000%. Operating cash flow positive. EPS is up 131%. Free cash flow is up like 300%. So Uber, from being this company never gonna make money, they've got a broken business model. This is gonna hemorrhage, money. They're giving so much of stock-based compensation, dilution, all that negativity to now they're actually generating decent amount of free cash flow, like almost $1 billion of a free cash flow. Business-wise, trips were up 24%, bookings were up 29%. Mobility revenue, right? This is where, so Uber has got 3 businesses, right? If you look at Uber, it categorized into 3. Fourth one is now starting to come up, not yet that big one. One is mobility, which is ferrying people, ride hailing, which is what we know Uber as. Number 2 is their delivery, which is food delivery, now became food delivery, grocery delivery, maybe pharma delivery, maybe wine delivery, liquor delivery, marijuana delivery. So basically delivery everything. So that's this business number 2. Business number 3 is their freight business, wherein they work with the commercial freight operators, truck operators, and do that commercial freight stuff, right? Now the very recent one is the 4th one, which is our advertising business, right? Very small portion, but this is something that we should watch out as an investor. Every company that we've been reviewing, like start like Google, watch out for a YouTube. That's like a dark horse, which street wasn't paying attention, right? 2 years ago. Now the street pays attention to what YouTube does. YouTube is as big as Netflix. Amazon, watch out for that advertising revenue, right? Over the last 1 year, now the street has woken up. But we talked about keep an eye on advertising revenue of Amazon. Now it has become big. Same is the case with Uber. Keep an eye on advertising revenue. That could be their next growth segment. Of course, they have some other business also like TaskRabbit and all that, too small. But looking at their, that's also done good. Mobility is up 34%. Delivery is up like 6%. advertiser base is up by 75%. From a revenue perspective, they don't break down the numbers, so we don't know how much revenue. Freight is not doing that great. But overall, I think numbers are good. Now, if you see here, I'm only focusing on operating income. The reason I focus on operating income and not on net income is net income gets skewed by accounting stuff, especially in the companies that have, because I think the net income for Uber is even better because of its stake in companies like Uber has got a stake in DD, Uber has got a stake in, bunch of equity investment. So I don't want management to get a credit for the fact that market in 2023 was great, and hence their net income has increased by a lot because their equity investment has gone higher. So most of the time you will see me, those who are new, you will see me focusing on operating income rather than on net income, right? Good things, delivery is up 100%, delivery adjusted EBITDA, which is great. Operating income, operating cash flow, EPS, all grown year over year. Uber One, which is their membership program, right, is close to 19 million. So this Uber One was launched, last year, right? It's already now getting close to 19 million. And 45% delivery gross booking came from Uber One members. Right? So those who have that membership, they actually tend to do more business with Uber. Not so good is the freight stuff. The unit economics is not working, but recently they launched the API business. We'll see what happens. Trend wise, nothing to complain about. All look good. No update on buyback or dividend in the earnings, but they did talk about buyback post earnings in their investor call, and that's where we saw stock was up to $80. Anything specific on management commentary? This one, strategically investing in grocery and retail. So if you are owner of Instacart, this should have you worried. Instacart also is, Instacart makes money on advertising, not on delivery, right? So, but now with Uber is gonna strategically focus on grocery and retail, and in the delivery business, scale matters. That's the only thing that matters, because I really don't care who's delivering my goods, as long as they can do it at in a cheaper way than their competitors, right? There is zero brand affinity in delivery business. So look at what happened to Lyft, right? Both Uber and Lyft started almost same time. Uber is like, new all-time high. Lyft lost 90% of its value. I know Lyft recently got a bump up, but still, it's like distant player, because scale matters. When it comes to delivery, scale matters. Active drivers are up 30% year over year. Drivers will go where most customers are. Most customers will go where they can find a quick driver. It's a network effect. It's a flywheel. Size matters here. What else?
Vivek,
Go ahead.
why were people so lazy during the pandemic not to go buy their own groceries? I mean, their own takeout food. I mean, excuse me. Can you give a commentary about how Indians would do it?
So we're all scared about going out and interacting with anyone, right?
Well, I went out all the time. I always went out. I went out in Hong Kong. I went out in the US because,
Yeah, you were brave. So first time I've never used Uber Eats, because hey, we generally don't, most of the time we cook at home. And but I did use, first time I used these online grocery shoppers to deliver groceries during the COVID time, because I really didn't want to go out.
well, I did too because I couldn't lift the bathroom tissue, on my bike. But I mean, can you tell me what you think of Americans who are too lazy to do stuff by themselves? I mean,
I think it's all difference between who puts more value, right? and it's also generational things. I've seen my daughter doing getting food ordered because she's like, if I have to spend half an hour to go and get it, that half an hour is more important for me, more valuable to me, because I can do some other stuff, right?
Well, admitted time costs of money. That's what they emphasize in
Yeah,
Hong Kong.
time costs money, right?
But
So
during the pandemic, I mean, during the pandemic. So thank you.
all right, so I don't want to read through the full, but I think my end conclusion was Uber continues to chug along well, right? And it could become deliver everything platform, right? That's how it started. Deliver people, pandemic, deliver food, then let's deliver groceries, let's deliver retail stuff. Now, once you have a network of people who have available, who have a time and on our platform, now you can expand either to deliver everything or also to create a new type of businesses, right? They started moving into gig working. Right? Hey, I'm already on Uber. Now I'm between the rides, I have a 2 hours available. Maybe I can go and mow some lawn. I can do that, right? And then why not? It's not too far-fetched. So Uber has already started doing those kind of a stuff also, right? If you become a big platform, and that's, I think that's where the value lies. Other thing I was just looking at, it would perfect the whole tech of logistically, connecting provider of a service and a buyer of a service, right? And it could license it out to other industries. So my idea was I want to increase my allocation in my portfolio. I didn't get any updates on freelance job, etc. yet. So that's on Uber. So I'm still bullish on Uber. Nothing to complain about. Let's do a quick look at their investor update. And what did we find there? Yeah, let's look at quick. So this is what excited the market. They announced $7 billion of share buyback plan. It means, they are able to generate good amount of cash, and now they can buy back their shares. They're already, cash flow positive. So that's what Uber shares jumped on that one. Quick look at this is what the next 3-year plan is. Gross booking, mid to high teens CAGR for next year. Adjusted EBITDA is high 30 to 40%. And free cash flow as a percent of adjusted EBITDA, 90%. Means, whatever is adjusted EBITDA. So it means they don't expect to have too much of a capex in next 3 to 4 years, and still be able to grow their their business. So market liked it, and stocks are what, $80 now. Where is Uber right now? Let's look at Uber. Yeah, it hit new all-time high of, I guess, is that an all-time high? I think so. Yeah, it is a new all-time high of $81, $82. So nothing to complain on Uber. All right, so let's look at the next one. Pinterest. Any interest in Pinterest? Or shall we go to 13F filings? Quick poll. Pinterest, 13F. Oh, yes. Okay. Do you have a recording from last week's session? Love to get your insight on the Google earning. So, yeah, so I actually uploaded the recording. Hold on, let me just share. So all the recordings are available on my website. So I did upload, the Microsoft. So generally it'll be there by Monday, Tuesday, depending on when I get some time. So I did upload it here. It's available for free. There's no charge. You just have to register, and you go to members and say weekly webinars, and you can see the recording of all the previous sessions. Okay, so If you're interested, I'll just. Okay, I just sent you the link. All right, let's move on. In Shanghai, Hong Kong, average restaurant food. Okay, yes, yes, no, yes, yes. Let's say yes. I saw more yes. Let's go to Pinterest, and we quickly run through Pinterest, and then we look at 13 Fs. Where's Pinterest? Pins and needles. Pinterest keep investors on pins and needles. All right, let's look at a Pinterest. Revenue up for Q4, up 12%. Good gross margins. That's what we want to see, a company which calls itself as a software company. Good gross margins, 20% operating margins, which is fine. Operating cash flow, $258 billion, which is up like whatever, 3,000% or 1,000%. EPS is up 900% because they never used to make much. Anyway, they made only 3 cents EPS. They are also generating free cash flow for over last 4, 5, 6 quarters. But here's the catch. A lot of this free cash flow, and this is where as an investor you need to watch out, is because a lot of investors are demanding from companies to be profitable, to generate free cash flow. I'm seeing a lot of companies reporting free cash flow. But what I want to do is dig deeper and see how this cash flow is being financed. In case of interest, majority of this cash flow is being financed by stock-based compensation, right? So that means instead of paying cash to your employees, you paid them a stock. So as an investor, I get diluted, right? So instead of paying in cash, you're paying them in kind. So I'm not too, excited about the fact that Pinterest had been able to generate free cash flow over last 6 or 7 quarters, right? Because, hey guys, you actually paid all of your free cash flow, or majority of that is coming from stock-based compensation. If you were to pay your employees instead of a stock in cash, you wouldn't have been able to generate free cash flow. Right? So just to keep in mind, because these companies do play these tricks, right? Basically, they'll dilute you from one side and give you cash on the other side. As an investor, you still lost. So revenue was up 12%. Now, if compared with the Meta is already at such a huge base and still able to grow at 25%. Street didn't like it. Street thought that, we'll be able to grow at the same pace at which at least Meta has grown, or maybe higher because it's a smaller one. Anyway, so revenue was lower than expected. Adjusted EPS was better than expected. Operating and net income had a huge growth because, if you look at their SG&A, that was down. Year-wise, year-to-year growth, revenue grew only 9%, right? Not that great a story for a social media company when you can have a Google growing at 20%, Meta growing at 25%, right? What I don't like it, the operating margin is still negative. It means operationally, they can't still figure out how to make money in this business, which is a case, and it is fine, because if you're still a small company, still your focus is not to be profitable, but to grow as a business. But something that we should keep in mind is looking at operating margins. Free cash flow was mostly sponsored by stock-based compensation. And looking at the business metrics, monthly active user grew only 11%. But what I liked was rest of the world grew nicely. If you look at the rest of the world, where's the rest of the world? MAU rest of the world grew 15%. So obviously on your North America side, everyone has a cell phone, and those are cell phone, probably all the people already have these social media apps. It's difficult to grow, and the same story I've seen on others also. The next phase of growth is coming from the Asian market or EMEA market, and not from North America. But good thing to see is that even ARPU and total revenue grew. Because generally on the rest of the world, you're not able to monetize the users as much you are able to monetize the North American users. So good to see that they were able to grow their ARPU even with the rest of the world. ARPU is basically average revenue per user. Guidance was only 15-17% growth, right, which is lower than the street expectations. Stock was punished, and saying, okay, we don't like it, you're not growing, why not? We'll rather allocate our capital to Meta, right, which is growing much faster, or allocate to Google, which is growing much faster, right? Or so not all social media companies are alike, or not all advertising companies are alike. I'll not go through all of these things, but a quick summary is around the monetization has been an issue in the past, but it's good to see that they are back in the growth. Just from a just from a Q4 perspective, I liked it because they had a focus on shoppability and making a tools for advertisers so that they can track their performance and they can monetize their user base. The biggest complaint that we have on Pinterest over the years is it's got like 400 million whatever users, right? Yeah, 498 million users, but they're not able to monetize it. So they changed the CEO. We got a new CEO, Bill Reddy, who came from Google. Prior to that, I think he was in PayPal, then moved to Google. And he's been in seat for maybe a year or so, but he is now doing changes to monetize, the Pinterest. And Pinterest is one social media company wherein ads are not a distraction. Every other social media companies you go, if you see an ads, that's kind of distraction in your user experience, right? So but Pinterest, you actually go there to actually see ads, right? And what's the worst is, even with that, when I say you see ads, because you are looking for ideas on how do I build this, or how do I decorate my corners, or how do I, do some stuff in, I need to do something in my patio, give me some ideas. Right? That's a place where you won't mind seeing something, new stuff that you're not expecting, good space for advertisers to embed themselves in those pins. And my vision is, you see an idea, you like it, whatever you see in that pin or a picture that you like it, you should be able to directly shop everything in that pin from Pinterest itself. So they are working on those things, like doing a deep linking into the catalogs and all that. Will take some time, but I think we got a new CEO. I would want to give them a time. So I'm going to do is opportunistically sell put at a lower strike price so that I can continue to build more position in this. Right now, I'm not concerned on, hey, the stock got punished. That's fine. Sometimes the markets have a short temperament. So they don't like if you don't meet the expectations, but over a I didn't see anything from a business strategy perspective that concerns me. All right, so that's Pinterest. We're done with earnings for this week. Next week, probably gonna bring Mercado Libre and some others. Any questions?
Do you want to go over Google? Why Google is again back to the retracement or something?
Sorry, Google what?
Like why Google is losing his trend again? Google is
The reason Google dropped down this week was because OpenAI came up. There was a rumor that OpenAI building a search product. Right. So I don't think so. Here's one, right? Google has been resting on its laurels for being the topmost in the search one for what, almost now 15 years. Obviously, they're a 20-year-old company, but they built it and now they are being challenged. But I don't think that the Google, I can write off Google. I think of the Magnificent Seven, if I were to initiate a new position in some of the company, probably Google and the Meta will be the only two one. because there's a pessimism in Google. Look at I mean, if you go back and review the last week's Google analysis, the amount of a cash that they are generating, even if they're not growing it, if they can continue to generate that amount of a cash and do a share buybacks, as an investor, I'll still be happy. So I still like Google. I'll still hold my Google.
Like one question, like when stock reaches all-time high, like whenever it reaches your price target, do you try to cut it out or you just hold it for like 5 years or something?
I will, so only if you become egregiously high. So, for example, NVDA, I've been cutting my position, but the beast continue to go high, right? I will only sell my shares if I see that the business has started to deteriorate, right? If I see that the stock has gone all-time high, it is because the business has done good. I'll still hold it. But looking at NVIDIA, this all-time high, business is also doing good. But my personal feeling is NVIDIA stock has run up too much too soon, and the business doesn't justify that pricing. And I did cut NVIDIA some of my position, but I still hold 1/3 of my position just as a schmuck insurance, right? Because the craziness can continue in the market. Just like if it continues to go higher, I'm like, yeah, see, I still hold the shares. If it falls down, see, I sold off 2/3 of my position, right? So have my cake and eat it too, right? But I have no plan. I don't automatically sell shares if they hit 52-week high.
I see. And one last question from me is that Starbucks is very lagging when we have a very good holiday season and all that.
I haven't looked at Starbucks. I don't know if it is. So Starbucks has one big challenge around China. So
I see.
Starbucks, Nike, these companies have a big presence in China, and there a good amount of our revenue coming from China. Now the economy in China is not doing good. In fact, they grew at what the least, and that's a concern. And again, I've not looked at Starbucks, so I don't know if this is the reason,
Yeah.
but this
Once you said
could be
China,
one
I
of the
totally
reasons.
understand. Once you said China, I totally understand. Nike and I think
Yeah,
Starbucks are linked together.
both
Thank you.
are both companies have good presence in China. They derive chunk of revenue from China.
Vivek, 2018 and 2019, before the pandemic, my neighborhood Starbucks sucked also. I mean, it was empty.
No, I don't see Starbucks empty. Like yesterday we went and there were like 4 people, me and my wife. Morning we went to Starbucks. There were like 4 people. In my neighborhood, Starbucks is always crowded. And we were just discussing like $4, $5 or $6 for a coffee. I'm like, it's not the cost of coffee, it's the cost of experience that they do, right? Starbucks idea is this is your third place. First, one place is home, other place is office, third place is Starbucks where you can spend time. And they've been able to do good. I don't think Starbucks, you can expect it to behave like the tech stocks and just to get a growth of 20-40%. But, chugging along will work out. Again, I've not looked at Starbucks, recently. They have had some union issues now, but now they have a new CEO, so hopefully he'll change it. But the current weakness could be around because of issues in China.
Oh, Vivek, did you hear what I said? I said 2018 and 2019. Starbucks looked lagging in my area.
Okay. Sorry, I think I missed that part. All right, let me sip some coconut water and then we'll get into what the smart money is doing. I hate when the financial media calls smart money. I mean, there are many smart individual investors around here, not just the hedge funds, but we'll just use the term, what the media uses it.
Oh, on that note, Vivek, the media uses China middle class, but that is not the China middle class that they show on. That's the China consumer, global consumer class. The middle class in China varies from near poverty to they show the top 5% when they show mainland Chinese people.
Hmm. Yeah, I don't. One good thing is that I stopped uh, watching CNBC. I mean, I reduced my consumption on CNBC, so which is good for me. I don't know what they share.
Excuse me, it's not only CNBC
Oh,
because China at that time. No,
yeah.
it's
So
all the media, New York Times, Washington Post.
yeah, so I think one, and this is not specific to China also, right? So this is which we have seen is that in US we we try to deploy the same segmentation what we have in US across all the countries, right? Now, when we talk about India, because I can relate to that, India is not just one country, right? Because there are different languages, the way of the food is different, everything is different and within the country itself. And but it's difficult concept if you're an American to understand how these big countries behave, and you can't just club everything into middle
Vivek,
class. Like you can say, oh, India has got what 400 million,
Vivek,
600 million middle class, or China has, but it's not that way. There are different under that itself, there are different segmentations.
Vivek, what you just said explains U.S. racism because people aren't willing to think in this country, or sorry, not everybody, but a significant portion. Excuse me. There's how many people who are willing to vote for Trump still? So it's at least 40% of the U.S. population isn't willing to think.
All right, I don't even want to go on to
Sorry about
Trump
that.
versus Biden.
No, I
So
didn't say that. I just said people are
yeah,
Americans largely are willing to think. That's why it's so dangerous for me to ride my bike now
uh, my,
for the past
my
4 years.
my experience of now having spent what close to 15 years in US is that we have a extremes here. And this is what I seen, having my kids go through school here, and in terms of what they teach and how they do it is either you have a knower coming, and there are some strata of a, let's say, from a student or education perspective, where there is, oh man, it's so easy. The education level in the US is so easy. And I still show some of my old books of India to my daughter. She's like, yeah, she can never do that. It's like a college level stuff which we did in school. So at some level, some portion is very, I would say, from education perspective, I feel it's very easy in US. On the other side, when it comes to the research or the way it is taught, it's extremely, I would say it is the best. So it's like I feel that there are extremes in US. There are people or some strata of people who will just want to rely on government bailouts because it exists here. Social security exists here. There is no social net in India, right? So you have to struggle for yourself. And then on the other side, there is the people who make the best product, best companies also exist in US. They're like, I generally feel there are two extremes. We have the best people, and then we have a one which are the laziest one. I don't want to do anything. So anyway, let's get back to investing. Dave say, Vivek, you stopped doing podcasts in 2020. Oh yeah, because I went back in job, and then I didn't have enough time to do podcasts as well as these weekly meetings. So it just, I didn't publish anything since that. I just want to, just a time crunch. So yeah, then I stopped doing the podcast. Maybe, I don't know, if you think that just the audio recording of this weekly could be pushed out to podcast, and if you want to hear while you're on the move, maybe that I can probably do it without adding too much of a work at my end. But yes, I did. It was just that it was becoming, I just couldn't keep up with the pace, with the job and investing, and with weekly stuff, meeting here and all that stuff. All right. My drive to work is one. I've been listening to podcasts. There are way better podcasts available, investing podcasts than mine. So Maybe if you're interested, maybe next week we can talk about it. Okay, getting back to 13F, we are already 5 minutes over. So quickly run through this and then we'll call it a day and maybe spend some time in Q&A if you have more questions. Altimeter Capital, you must know, is the biggest. Meta, Uber. See, Uber, they increased. No, not Uber is number 3. So I love Brad Gessner. Good guy. Value loves it. He basically asked Zuck to buckle up, in 2020, tighten the belt, which Zuck did. And then we saw what Facebook did. So I want to keep an eye on what Altimeter has. Snow, Meta, Uber, Microsoft, NVDA, Confluent. I don't know. I've never been able to buy Confluent. I just don't have single product, Pony. I don't know how long will it continue. So I have not bought it. Mercado Libre, cool. All right, let's look at NVIDIA. Yeah, this was like NVIDIA reported 5 positions. They have a position in ARM, RXRX, SoundHound, TSP, and Nanox, right? This position was like $396,000, and that added $300 million to Nanox capital market cap. So I think these all stocks would have gone through roof just because NVIDIA had 5 position and total investment is $230 million, probably added more than $1 billion of market cap across this. That's what the crazy stuff is. Third point, Daniel Loeb has 6.6 billion asset under management. What did they add? FleetCor, Verizon, PG&E, United Steel. Was that a merger and acquisition play? And again, all these are as of December. Positions could have changed. Top 5 holdings is PG&E, Microsoft, Amazon, Bodywork, Bath and Body Works, Danaher. Anything that stands out? Let's move on. David Tepper, Appaloosa, $5.8 billion under management. Top buys is Oracle, ARKK, UPS, Amazon, Microsoft. And sells were sold NVIDIA, maybe probably sold it too soon. In December, where was NVIDIA in December? It's like Cathy Wood sold NVIDIA in 2018, 2020, somewhere. Was NVIDIA in December, yeah, $400. So I don't know when they actually sold it, but they reported in the December 13F that they sold a little bit of NVIDIA. Google, JD, ANET. Top 5 positions, Meta, Microsoft, Amazon, NVIDIA still top 5, and Uber. So good to see now Uber is becoming like some of a big position in these hedge funds. Little late, that's fine. Steve Cohen, I think there is something a mistake. I don't think it's $139 billion, but let's try it again. To me, that seems to be too high. 0.72 AUM 2023. $32 billion. I think the whale wisdom, maybe I picked it wrongly. 32 billion, not 130. I'm like, that doesn't seem to be right. So $32 billion. Spider. And Spider is their best. Probably these may be negotiated contracts. Then Amazon, Meta, Dell. But I think majority of them is Spider. So 0.72 is nothing, but you can just replicate and buy Spider. Berkshire Hathaway. Continue to add position in Sirius, Occidental Petroleum. Now they own what, 50% of Occidental. CVX. Sorry, this is a change. So CVX is sold off. I don't know, sir. Top buys. These are the top sales. So sold off HPQ a little bit. Recently they sold off what, some 10,000 or 1 million shares of Apple. That become a news. but still, Apple is still more than 50%. Bank of America, AXP, Coca-Cola, Chevron is still the bigger one. Nothing surprising. Stanley Druckenmiller. Top 5, Microsoft, Coupang, NVIDIA, maybe these may be some call options, or I don't know, maybe, or some other structured product. Lilly. So Stanley Druckenmiller is kind of looks like getting the wind of the market, right? NVDA and Lilly. Or did
He
he
took a big
Seagate?
sorry, he took a big dive with Coupon. That's why I asked you last week.
Coupang is still 11% of his holdings.
Oh, excuse me. I said he took a big dive. He lost a lot of money.
Baby, I'll have to go into Coupang. I mean, the stock, or it's not been, I mean, it's between what, over the last or let's say a quarter before that, it's been 18 and 14. It's kind of a range for the whole, let's say 1 year from now, it's between, let's say 19 and this is probably the lowest, which is like June, July. If I ignore that, it's between 19 and 14, just been range bound. But again, Coupang it's going to be a decade story, right? It's setting up an e-commerce business is not easy. So Baillie, Gifford, early investors in Teslas and Mercado Libres and Amazons. So he adding Pinduoduo, Shopify, and Phase Energy. Interesting. I didn't realize that he's big on energy side also. Block, Meta Platforms. So top 5 is Mercado Libre, NVIDIA, Amazon, Pinduoduo, Shopify. So almost all of them have a big positions in NVIDIA, right? No one wants to not have NVIDIA in their portfolio. NVIDIA is now the IBMs of the 1960s. Fund manager cannot be fired for buying NVIDIA. Doesn't matter. It doesn't matter the valuation, right? So interesting story about the fund managers. You're not being, paid for performance. You're being fired for underperforming, right? So whether you make money or not, you shouldn't do worse than, let's say, your peers. So if everyone is buying NVIDIA, I'll buy NVIDIA too. Michael Burry, only 237 million with the 4 clients. Bought HCA, Oracle, CVS, Google. Top positions are Baba, JD, HCA, Oracle, and Citigroup. I think the last one is Pershing Square. Bill Ackman runs very concentrated portfolio. So he sold low. I never own low and don't track it, but he was big on lows and looks like probably sold all of his position in lows and replace it with maybe Howard Hughes. No, Howard Hughes is 15%. So Chipotle, QSR, Hilton. He's one hedge fund manager who runs very concentrated portfolio, 8 or 9, that's it, with the big convictions. So you would see a lot of volatility in his portfolio. So that's it on 13Fs. Let's, I think, remaining content we can take up next week. But let me go through some of the comments. UPS is pretty strong. I didn't track UPS earnings, etc. So I don't know how they're doing it. Why do you think it's strong, Prashant?
I feel they have a pretty good model in terms of the people who kind of use UPS, and it's one of, like, after FedEx, it's like number 2, and the partnerships they have with Amazon and like if anybody talks about, hey, where do I return my product after FedEx, the second thing which they look up to is UPS. So that was my thesis, that hey, if it's like undervalued, a good one to buy and ride on it.
Okay, so let me, see if I can UPS.
purely from their business model and the coverage they have.
All right, so let me just run up and see if I can get a quick numbers on UPS.
The stock doesn't have much room.
Hold on. Okay. Hold on, I'm just doing something on side. Okay, we'll come back to UPS. One trader in my group is super bullish. He's selling Nasdaq futures 20K. He's a brave guy. And who knows? So I mean, it doesn't mean that if the market is all-time high, it can't go all-time high. When did some meeting we reviewed the charts, right? That all-time high, how many times it had led to the next all-time high, right? So yeah, maybe if we hit 20K, I'll be happy. My hedges will lose, but that's fine. The rest of the portfolio will work. Novo Nordisk is going over the roof, picked up shares Jan at 107. Now it's 124. Why not? Ozempic, weight loss drugs, is the solution for all the problems in the world. So why not? Novo Nordisk, Eli Lilly, both are just riding on the wave of weight loss drugs. Where did you get these 13 filings? Oh, there are multiple sites. Yesterday I was looking at it. I looked at 2 or 3 sites. What I found was Whale Wisdom. So that's where I picked up from. Whale Wisdom, because I could just get a one screenshot of these 3 blocks, and I thought for me that was good. So pick it up from Whale Wisdom. Okay, so let's look at a UPS. I'm just gonna go to geez, I didn't even hold on. UPS. Where's the UPS data? Any other question while we'll bring up UPS?
Vivek, I've been taking high blood pressure medicine since 2017, and then recently I had some blood clots, so I'm taking blood thinners. I tell you, these blood thinners are a hell of a lot better than the other drugs. I mean, I should have taken it in 2017 rather than these. What I'm saying is, we should look into and I think Pfizer. People don't like Pfizer, but Pfizer produces. They also produces anti-sugar diabetes drugs, but I don't think the street likes Pfizer too much.
So I think the Pfizer was they got the stock got the tailwind from their COVID stuff. And now everyone was focused on, will they be able to monetize that or not? And I think after COVID, what is PFE? Yeah. And all the tailwind that they got from COVID, now they're giving up, all that stuff. Again, this is where it becomes important is, what the price that they paid. And now no one wants to go and take a COVID shots. And again, I don't follow Pfizer. I'm not a big one on the pharma companies. I don't own except J&J, which I bought like 3-4 years ago because of a dividend. It's sitting in a retirement account. I don't own any individual pharma companies. It's a one area where I haven't built expertise on analysis on all that. But I know is that the whole story around Pfizer over the last, I think since 2022 and probably mid of 2021 has been, no one wants to get COVID shots. So that didn't pan out and that didn't work out well for Pfizer. Anyway, so let's look at a UPS. So just bring that up. Also, UPS hasn't reported the results yet. So annually, I don't know, 3%, 6%, 7% CAGR growth, 13% operating margins, been able to generate some decent amount of a cash flow. They have actually some real cash flows. Good return on invested capital. I like that 20% return on invested capital. Cool. Over the last 2 years, see a big uptick in the operating income. But let's see, sorry, in the net income. But let's see if I pick up operating income. Audit asset. Okay, hold on. Operating income. See how the trend of operating income has been.
Where do you import all this data from? Future data, revenues, and all that?
Stock analysis.
Stockanalysis.com. Okay.
Yeah. Yeah, so I think you're right. I mean, it's a good decent company with 20% ROIC over the last 10 years.
Right. And I feel also, if you look, they have a moat, like, as I said, they have this brand, like why people prefer Google, Meta, Microsoft, or any other top companies, Netflix, for example. Uh, so I feel UPS is like one of still the preferred and the network which they have.
So I don't know what's their customer concentration. How big is the Amazon of their business? One thing you may want to look at is because Amazon is trying to build its own fleet, right? At the end of the day, they want to cut cost. So
Valid
if
point.
let's say Amazon moves over from a UPS, how much will UPS be impacted?
Valid point. Vivek. Maybe I need to do a little bit of double click over
Yeah,
there.
yeah, sure. I've never looked at this stock, but just now because you brought up UPS, I just got this data. I'm looking at good balance sheet. $5-7 billion on balance sheet by end of 2022. I think once they report the 23, probably have 23 numbers. And yeah, not too much of a capex spending also, which is, yeah, I mean, it's whether it's going to grow like 20-30%, probably not, but something steady, ready, yeah. Now, it's so not depending what kind of investor you are, you can decide what to do with this. All right.
One question, Vivek, I have. Do you know anything about quad witching? What exactly the quad witching does on 16th of March?
So generally, the quad witching is a day on which you have your normal. That's like a monthly expiration of your normal options. It would be a week. There are 4 things: monthly expiration. Then I think the futures also expire at that day. Then some weekly futures expire at that day. So there are 3 of these 4 things that get mixed up. And because there are so many of these expirations that is happening, let's pull it out. I probably don't remember because I don't do much futures, so I don't pay much attention. But because of these too many expirations happening together, you could see a lot of volatility in the markets. That's what the quad witching is. What all 4 things expire. So you have a stock index futures. So index futures, index options, of course, single stock options, because that's a monthly expiration, and the single stock futures. Okay. So basically index futures, index options, stock futures, stock option. These all 4 expire on the same day. That's what called quad witching. And then there is, I think that's called a triple. There are some days which is like a triple witching days in which only 3 of them expire. Just that it could be more volatile. But this doesn't, for me, this doesn't, I don't take this into account for my options because I still have a March 16th expiration, many option trades that are still open in March 16th. So remember, so by the way, if you want to look at open trades, come on. sometimes slow, but yes, you can see some of my open trades that, and I think forget about the trades. I would not suggest anyone to copy anyone's trade, but more important would be on the commentary, right? Why do I do what I've done? Right. So what I said about what SMCI, opening a long put spread to negative deltas, right? Because hey, I wanted to get some negative deltas. So yeah, if you see, I have a lot of March which are still open, right? Because I started building April portfolio, but right now my old done trades that are done for March expiration, most of them are March. April I just started building right now. Like Snap, I got covered calls on April because I got assigned the shares. I opened up covered calls on Snap. Silver, I've got a covered call on April. Yeah. So I'm still a lot on March. Triple witching, quad witching. I mean, I just want to run, month in, month out. Just do what's been, working over years. All right. Dave says he's heavy into pharma. Also, he's got a BP, Oxy, KMI. KMI, I think Kinder Morgan. I think KMI I hear the name of KMI for, as a fixed income play, giving like a steady income. I don't know. I've never owned KMI. What are your thoughts about Elon shifting AI focus from Tesla to XAI? So that number one is he cannot take any legally, he cannot take any proprietary AI stuff that has been developed in Tesla to XAI, because that's Tesla's property, right? It's not Elon's property. But when it comes to Tesla's board of governor, who is going to question Elon? The whole board of governor is like Elon friends and family, even though there many of them are so-called independent, but they are his friends, right? They go on. So probably no one question them. But I think, forget about what I think of. It's about Mark. Who is that? Was it Morgan Stanley? I can't recall the name of analyst. When Tesla has revealed its AI ambition, $600 billion worth of market cap was assumed to accrue to Tesla because of their AI initiatives. So if Musk is not going to do AI development in Tesla, what happens to that $600 billion? It is something that we need to think about. And again, will he take or will not take? Who knows? But yeah, he's. I mean, if you're a Tesla shareholder, you have to live with Musk's idiosyncrasies. That's one reason why I've been always very careful around Tesla. Is I don't know what Musk's gonna do next. If Tesla is just a EV company, sort of AI company, how do it affect the stock price? I mean, so even for not just EV, I'd say Tesla also got an energy storage business. So that's another business for Tesla. AI business is not even making any money for Tesla yet. What has Optimus done? Nothing. Right? So it's all future. We think that this AI will add that much value. So I don't think short term. So probably the stock price may be impacted, but from a business revenue, etc., I don't think taking AI out is going to have an immediate impact. But yeah, now the bigger question is how much of that AI bump has been priced into the current stock price? Even Elon doesn't know. So I don't even want to hazard the guess. Alrighty, Musk is so unfocused. Musk is Musk. Now he's challenging Delaware. He is already moving out. His company is out of Delaware. After the Delaware judge challenged about $55 billion off his pay package. All right, guys, I think that's it for today. So thank you everyone for joining in. And it's good to talk to you. And yeah, Let me know if any specific topic you want me to cover. Otherwise, I'll just go through, whatever I see in that week, earnings, or anything else that, comes to my mind. Cool. All right. Welcome.
Where do you upload all your recordings?
Is there on
Is
my
it on
website? Like where I just shared,
option.gig.com?
you can do members and see weekly webinars. I think that the only two sections that get it, again, I'm not maintaining this, but only two sections that get updated here week are this open trades, because this is as and when I do trade, this get updated. The other one is the weekly webinar, which I update every week, and I upload a new video. So those who are new to options, because I get this question, how do you start on options? Is long back, which it was like July 2021. I did a whole series of boot camp on how to get started in options. So if you are new to options, you may want to spend some time to getting started. What's a covered call is, what's a put, how do you manage your option position, how do you manage your option position, what are the things that you should look at before opening an option trade. If you have a small account, like $25,000 account, right, what are some strategies that you can use? You can't sell a naked put on Tesla or on NVDA. What can you do? Can you still get a bullish exposure using options? Yes, that's what I cover here. How to build a diversified portfolio using options. I think I took $25,000, $30,000 portfolio and added positions on bonds, metals, equities. You don't really need to have a big one, right? Here we start to get into a little more detail. You're managing a trade. If a trade is going against you, you sold a put, the stock is coming down, and you started to lose your sleep. Oh my God, I'm gonna get assigned. What are things you can do? How do you find your assignment risk? Are you at a risk of assignment or not? How do you exit your trade? What else? Then, what trade inversion. Then we get into more advanced concepts of Greeks, deltas, theta, vega, how to use it in your, not just your trading, but in your overall portfolio management. And then I finish with the how do you use options to hedge your portfolio. Right? This is what I do is options to hedge my long portfolio. So if you're new to options, the recording is all available here. And bring up the questions in this meeting.
Vivek, sorry for bringing up very basic thing, but who buys sell contracts on put contract?
See, it's a market makers. And this is where most of the time is the market maker, Citadel. And this is what surprised me. Yesterday on the Twitter, I saw a note from someone who's got 50,000 followers. And it said, I sold, I don't know, was it SoFi, Uber, or some contract at $25. Maybe it was a Robinhood. So that investor / traders wrote, I sold my, let's say, X contract at $25. It got immediately filled. Looks like there's a lot of a demand for call options on at 25. I'm like, dude, you're like 50,000 followers. What are you talking? It's not another retail investor buying it. It's a market maker whose job is to buy whatever you want to sell. Market makers don't think that the stock is going to go high. They are stay delta neutral. They make money in a different way. So to answer questions, most of the time, Robinhood sell all their trades to Citadel. It will be market maker, Citadel, Susquehanna, Jane Street. There are a bunch of those. They will buy it. Or if it gets to the exchange, few of trades get to exchange, then you can get matched to whoever else is willing to buy and you're selling it. But majority of these trades happen with the market makers who have zero idea or who have a zero opinion about where the stock is going to go. You want to sell, they'll buy. You want to buy, they'll sell. So don't think that if you are selling a call and someone is buying means, oh, that person thinks that it is bullish. Am I doing something wrong? No, market makers don't even worry about the stock.
Oh, excuse me. I said selling a put.
Yeah, put or call doesn't matter. Either case.
Buy a put.
Either case, you sell a put, market maker will buy a put from you. So when market maker buys a put from you, they lose delta, they're going to buy a stock to neutralize themselves. So majority of the trades happen with market makers. I see a message. Can you have a new boot camp? I don't know. I mean, I'll have to find time to do this. I've never did another one since 2021. I'm not able to sign in as a new user. Any issue going on?
Just did that.
Excuse me, your boot camp was excellent. Why don't you they watch it and ask you questions since you're so accessible? It was very good, well done, sir.
Oh, you're welcome. Glad you liked it. Oh, says I saw two messages saying unable to sign in. I don't know. I see I see 2-3 people have signed on.
Yeah, I just now signed in, so it's working.
Okay.
Means like I just sign up.
Okay. Cool. So yeah, so I don't know, maybe try again. I
He,
don't
he might get an email address link, and then he has to click that. Then
yeah. So
only.
what I've done is at least just to avoid the spam, you will have to once you sign in, it'll send you an email to verify, and you have to just verify your email. Okay. All right. So I guess, like I said, maybe right now I'm busy in other stuff around investing, so I've not spent much time on the website. But these two things, weekly webinar and the open trades, are the only two areas where it gets updated. I know I could put the documents here or the blogs here. Oh, if I have time, I'll go there. All right, guys, thank you very much. We are all way beyond our time, like always. But good to talk to you, and we'll talk again next week. I hope to see those who are joining new. Hopefully you liked it, and would oblige
No,
me by joining next week.
yeah, Vivek, it was very knowledgeable. Thank you so much, and I think I will follow you again going forward.
Right. So I am nowadays I'm more active on Twitter. If Twitter is your fancy, I mean, I only started getting on Twitter like last year, and now I found that, gosh, I should have gone on Twitter much sooner. So I'm trying to become more active. So if you want to, how to even get, okay, this is how, if you want to get thoughts on Twitter, this is where my Twitter oh, sorry, should have sent it to everyone. This is what my Twitter profile is. I joined Twitter like years ago, but I only became active last year. Cool. All right, guys. Thank you, everyone.